Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. When it comes to the question of holding cash in portfolios, we often hear two very opposing arguments. Cash is king and cash is trash. Cash in portfolios has been a point of long-running debate amongst market participants and academics alike. So, cash, is it king or is it trash? Well, in our view, it could be both. Let me explain. Over the long run, returns on cash underperform those on other financial market assets, including equities and bonds. For the context, over the past 120 years or so in the US, cash gave an average annual return of 1%, while US bonds and US equities returned 2.5% and 6.6% respectively on an annualized basis. Of course, cash holdings come with significantly lower volatility, but lower returns for investors might mean failure in achieving financial objectives. The experience of the past 12 years has been even worse. After all, for most of that time, holding cash yielded almost nothing. For investors in Europe, the returns on cash were below zero given the negative interest rate regime there. Looking at this experience, one could be tempted to believe that cash is trash. However, considering the even more recent experience of the past 8 months or so, cash can be perceived to be the king. At the time when most financial market assets, especially equities and bonds, suffered significant losses, cash proved to be the store of value. Of course, in real terms, that is, after adjusting for inflation, returns on cash were negative but still were significantly better than losses in equity and bond portfolios. Also, as central banks have engaged in a tough fight against inflation, they increased interest rates sharply, making returns on cash a lot more tangible. For the context, 1 year ago, a 6-month US Treasury bill yielded 0.04%. It now yields 3.25%. That 3.25% accompanies lower risk, is higher than the yield on 10-year US Treasury bond, is more than double the dividend yield of the S&P 500 stock index, and is almost equal to the dividend yield on US real estate investment trusts. This proposition makes cash a king, doesn't it? From an asset allocation point of view, there are two broad reasons to hold cash in one's portfolios. Firstly, this could be done as a sign of caution when one believes that economy is likely to enter a recession. Second, when one sees the returns on cash turning lucrative. Inflation, interest rates, risk appetite, and performance of other financial market assets are some other factors that could influence the allocation to cash in multi-asset portfolios. Holding periods also make a difference. Holding too much cash for too long penalizes the investor with huge opportunity costs, something we have noticed over the past 12 years or so. But holding cash on a tactical basis could prove to be good to the portfolios, something that we've experienced over the past 8 months. Against this context, for some time now, we've been overweight cash and liquidity in our asset allocation. Holding cash in US dollar or a currency pegged to the US dollar turned out to be a sound investment decision given the strength in the greenback so far this year and weakness in other financial market assets. However, at this stage, we're waiting patiently for opportunities to deploy the cash to increase our exposure to other financial market assets at a cheaper value than at the start of the year. Such an opportunity to re-risk should arrive sooner rather than later. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information on what was discussed on this podcast and to understand what role cash is playing in your portfolios, please reach out to your relationship manager at ADCB. You can also log on to our website at www.adcbam.com for more information. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.